Hi, this is Brent with Trade Therapy, and welcome back to the Trading Couch. We're talking about Apple, our Clarity Spotlight last week. We're going to look at how Apple moved from a distribution trap into a full reaccumulation cycle, where it currently sits on its weekly and daily charts as it pushes towards its next extension zone, and how the daily structure, along with the leveraged Mag 7 ETF QQQU, confirm what institutions are really doing into year end. Before we get started, this video, along with all of Trade Therapy content, is for educational purposes only. Don't consider this investment advice. Trading involves risk. Always do your own work and your own due diligence and trade according to your plan and your own risk tolerance. Let's start with a look back, because that's really where the current Apple campaign was built on the change of character that happened earlier this year. And we can see that as Apple pushed out of this sideways reaccumulation structure into what Wyckoff called an upthrust after distribution, price poked above these old highs, headlines framed it as strength. There was heavy options flow, a lot of retail traders chasing this breakout, thinking it was the start of the next brand new leg up. Under the surface, the tape was really telling a different story. As Apple broke out above that range, you can see that volume was actually thinning here. You don't see heavy sponsorship as price moved into new territory. And the real activity showed up once Apple started breaking down after the shooting star candle. That's really where the activity picked up. And many people thought this was the start of a major breakdown in mega cap tech. If we jump over to a longer term chart, it really tells a different story. If we jump forward to May now, we can see these long lower wicks on the monthly chart. And what that tells us is most of the trading was done at the bottom of these wicks. This is classic institutional reaccumulation behavior. Institutions are really doing two jobs at the same time at this point. They're recycling all of these gains that were made from the previous lows. They're also shaking out weaker hands. They're absorbing unwanted supply so that when they're ready to resume their markup campaign, they don't have weaker hands selling into them. And so they quietly rebuild their exposure into fear, while headlines were fixated on the Mag 7's fragility and mega cap tech breakdowns and the fears of tariffs and everything. So the first lesson in Apple is really simple. The scary part of the cycle was not trend failure. This is reset. This is profit being taken with distribution at the highs, a controlled breakdown, and then heavy demand at the lows that really rebuilt the base for the campaign that brought Apple to where it is today. And if we go over to a current weekly chart, we can see where the reset really handed off from weaker hands to stronger hands. You can see the strong breakout on conviction here. It isn't really important that a spring was set. The most important thing is actually what happened after that reset. Risk was recycled, weak hands were shaken out, and now a renewed markup has carried price all the way back to the top of this rising channel. On this weekly chart, we can see that Apple's been riding this rising channel for quite some time. At this point, this reaccumulation structure is no longer in question. Prices advanced above that. This is working support now. Our moving averages are all curling up and supporting prices. It moves up into this Fibonacci cluster level right at 300 and 310, also coinciding with this long-term resistance or supply line right here. This region is really where late cycle math meets the seasonal Apple story in this cycle right here. There's a ton of unrealized gains on the table from this post reaccumulation breakout and run here. It's really decision time for the institutions. Are they going to process gains here and carve out a sideways, or maybe even pull back a little bit into a reaccumulation structure here as they basically do what they just did earlier this year? Or are they going to press on forward? Are they going to leverage some of the friendly narrative that's out there about Apple? They've got new devices coming out, services business is growing, AI on the device, stable cash flow story. It's a very noisy tape, but all good news. And so for institutions, the combination creates a decision zone. Do they reaccumulate here or possibly press higher and then maybe back test the top half of this channel and then extend above that and continue pressing higher? We're not trying to guess which choice they're going to make. We're just presenting the two options that they're going to consider, and we'll see what price behavior and what volume confirms for us as we get there. But somewhere in this upper corridor, institutions are going to have to make a decision. Are they going to process gains, maybe back test the breakout, or are they going to press higher and continue on up into their higher Fibonacci zones? A good place to start to try to investigate and see if we can gain additional information on what sort of decision they're going to make is by really looking closer into the daily chart. If we jump over to a current daily chart, we can see the full Wyckoff reaccumulation structure from a buying climax to an automatic reaction, then a secondary test, which then extends up into an upthrust after distribution, and then the breakdown into the spring, undercutting this entire range, shaking out all of the retail investors that came in thinking that they were buying into the next breakout, taking them out before extending up into this really aggressive markup campaign and push up out of that zone as institutions took advantage of clearing the path of least resistance by shaking out all of the weaker hands. There's a very thin profile, which leads us to believe that they may possibly be looking to extend higher here. We don't see heavy profit taking. Most of the activity was done within this base, in the reaccumulation base right here, and just below that. Once they've gotten pressed up higher than that, institutions on Wall Street no longer really interested in buying more shares than they need to just keep price advancing. So we see a very thin profile, which sort of leans to continuation. There's not a lot of sellers trapped. They were taken out, so there's not a lot of resistance. So we'll be watching price to respect these moving averages as long as it continues to hold the shorter term moving averages. We think that Apple can continue on. That's what we're watching in Apple. Before we wrap up, I want to bring in one more piece of the puzzle that we covered in clarity this week. The leveraged Mag 7 ETF, QQQU, the daily we covered this week. You see the price broke it down, retesting this breakout of the structural high. You see this massive volume surge here, buying the low. And you see that low is the culmination of this massive bullish divergence that's been developing since early summer this year. It has a lot in common with the low from April that was also bought up on volume, that was also the culmination of this bullish divergence that had been building up since late summer 2024. So put that next to Apple, and the message is pretty clear. Apple's completed a full distribution and reaccumulation loop. Mag 7 looks like it has a very bullish setup, a setup that has previously this year produced a massive run across the Mag 7. So you combine those two things, and really you've got a very interesting setup. One chart shows you that there's structure, shows you the structure in the single name, looks very bullish, approaching resistance decision time for institutions. But then on the other, it shows you how the institutions are positioned within the sector in expressing their positions in the form of heavy volume at the low, buying up this low after what is a very similar reaccumulation, upthrust after distribution, and then spring develop. It's really interesting setup for Apple, decision time for institutions, but what we're seeing in the sector would indicate bullish positioning and potential continuation. We'll see how it goes. We'll be watching to see if these shorter term moving averages on QQQU hold, or if we see further breakdown to back test this 200-day moving average. That's not our primary expectation, but there is a setup for a potential ABC downward move to test this point of control. But again, not our primary expectation, volume not supporting that, and certainly not the bullish divergence. That's all the time we've got for Apple this week. We'll see you back here on the Trading Couch next week.